webinar. We're going to give everyone a few minutes to join and make sure they can see the screen. So we're going to be starting in just a few minutes. And we will also be recording this webinar. So I'm going to hit record in a couple seconds. And then once that recording is completed, we'll also be able to send this out to those that attended and that RSVP'd and that have been receiving our emails. Okay, it's 11 o'clock. We're gonna give people a few more minutes. Looks like we have some attendees joining us, so thank you all for joining today, taking time out of your day. And we will go ahead and I'm going to go ahead and kick off. So guys, thank you guys for joining the AgriCare webinar. You're going to hear from Paul and Matt today. They're going to walk you through kind of what's going on in the healthcare world, the problem that we're seeing, and providing you guys a solution to access better care at a better cost for you and your groups. I'm going to go ahead, Paul, and just hand that over to you, and you can introduce yourself.
Sounds good. Thanks, Alicia. And thank you, everybody, for joining today, and good morning to you all. It's afternoon for me on the East Coast. My name is Paul Culpa, as Alicia said, and Matt McEwen and I are primarily going to go through this presentation. I won't steal his thunder and let him kind of introduce himself, but we'll do introductions and kind of talk about, who we are at Agri-Services Agency and Imagine 360. And as Alicia said, we're going to kind of outline the healthcare problem. And I think we all kind of know what the healthcare problem is and has been. Everyone's seeing 10 to 15%, premium increases every year for as long as I've been in the health insurance industry, which has been a very long time. But it's interesting to see the numbers and to see really what is happening in the marketplace. And then we'll talk about the solution that we've come up with and the solution that we've looking to roll out this year in Texas, and then kind of how it works. And Matt will get into the nitty gritty on kind of how the infrastructure of this thing works and why it's different and why it's important and why we think this is a great solution for ag businesses and farmers. So who are we? We are Agri-Services Agency. We were founded 50 years ago in the Northeast of the United States from a dairy cooperative. And our primary goal and our role is to help farms and agribusinesses. That's what we do every day. We exclusively serve farms in the ag community. And we've administered programs for a number of years. We have a couple of health programs that we've administered. We have our own workers' compensation program, all of those for farmers and ag businesses specifically. But a few years ago, we were looking to find a new solution. When healthcare reform was passed, it really changed the dynamic of the health insurance world. And we struggled with trying to come up with solutions that we felt, quite frankly, to help an underserved market, particularly in rural areas. So we a couple years ago we partnered with Imagine 360, and we've come up with this new program that we're going to talk about today called AgriCare. It is for sole proprietors and employer groups two and over. And we'll get into the details of that. But before I do that, I would like to hand it to Matt to kind of provide a little overview of who he is in Imagine 360.
Thanks, Paul. So I'm Matt McEwen with Imagine 360. I'm based in Dallas, Texas. I've been with the firm for 25 years, so I've been around the block a few times. But about 19 years ago, we introduced version 1 of what we're going to talk about today as it relates to healthcare. And the problem that we saw as a health plan serving employers, providing health insurance to their employees, is that the health insurance system was really stacked against the employers and the employees. Between the big drug companies, hospital systems, big insurance companies, everybody was making money off of the employers who are struggling to provide health care to their employees. And ultimately, the employees are struggling who can't afford their own health plan. So we introduced this concept that we'll talk about today called reference-based pricing in order to put employers back in control, obviously to save money for the organization, but also to save money for the employees and provide better benefits. So this concept we're going to talk about today is not new. We're on version 7.0, in 2025, and Agri-Services has adopted this, and now we're able to scale it to provide employers under this program the scale as if they were a very large employer. And so we're really excited to talk about this today.
Thanks, Matt. Yeah, so, I don't think this is news to anyone, but, some of the challenges that face, farmers and ag businesses every day is, first and foremost, access to comprehensive quality health insurance. And I say comprehensive because this is a comprehensive health insurance program that we're going to talk about today. You'll see a lot of carriers or niche companies coming in and kind of cutting corners and maybe providing limited benefits or minimum essential plans or those sorts of things. And in some cases, those might be okay and sufficient for certain folks. But, in a lot of respects, it's challenging to find good quality health insurance, comprehensive health insurance that covers what you would want to cover on a plan and be affordable, which is one of the key pieces, right? So, finding that affordable plans, and I say both from a premium and out-of-pocket perspective, because what you're going to see today is not only are the premiums in this plan, less expensive than the standard group market, but also from an employee perspective, kind of go to Matt's point, the employees, they're getting hit with high deductibles and high out-of-pocket costs. And this plan will actually lower their out-of-pocket costs. So it's really a win-win for both the employer and the employee. Finding healthcare providers in rural areas. I know, typically Blue Cross Blue Shield has a pretty comprehensive network in most states. But, a lot of the other carriers focus on the metropolitan areas, and they might not have, a good provider network or a hospital system available to you in their health insurance programs. Obviously having a limited ability to cost shift due to employee wages. Employee wages, and I think we've got a slide in here that shows, employee wages are going up 3 to 4% each year, but healthcare costs are going up 10 to 15% each year. So how do you as an employer continue to pass on that cost to the employee while at the same time increasing deductibles and increasing out-of-pocket costs? So, and then of course, retaining and recruiting employees is obviously important, and it's it's important. It's a good benefit to have a health insurance benefits package for employees to kind of keep them involved with the employer, and of course language barriers, as we know, is always an issue. So again, we believe that companies and their employees deserve to pay a fair price for quality healthcare, and that's really what this program is about. And I'll say it probably another 5 times in this presentation, but it is comprehensive quality health insurance at a low premium, and you'll see why we're able to get to that low premium, and we'll get into the details of that. So, Matt, do you want to kind of talk a little bit about the next couple of slides as far as the kind of the market we're in and kind of where we've been? And I don't think this is much news to folks, but I think it's really eye-opening when you see some of the facts and figures.
Yeah. So thanks, certainly, Paul. So this slide applies whether you're a farmer, an accounting firm, right, a technology company, but particularly in the farm industry. But the pain across the board from the organization is felt as it relates to healthcare, right? You have the ownership that's trying to provide healthcare for their employees, and every year costs go up, right? I can control every expense I have in my business, but I'm in the dark when it comes to healthcare, and I'm just waiting on my renewal each year to see how much the increase will be, okay? And then if you have an HR team, the human resource people just want to take care of the employees, right? They want to recruit, retain people, and be the paternal arm of the organization. But then the big piece too is you have your employees, right? And as Paul referenced, their wages might go up, but the healthcare cost increases are outpacing their pay increases, right? And so many people, even that have insurance or comprehensive medical insurance, are functionally uninsured because they can't afford their own deductible, right? And then on top of that, the annual premium. So the pain is felt at all levels within organizations. And one thing we're challenging here, and this might or might not be news to you, but there's nothing else that any of us purchase in our lives, whether it's an organization buying healthcare or an individual, but the way we buy healthcare is unlike anything we've ever seen, meaning that the hospitals get to set the prices, whether it's a simple, Tylenol, right, a heart stent to an orthopedic device, they get to set the price. There is no regulation on how much they can charge. Most people that consume healthcare or employer-based healthcare rely on what's called a PPO network. I'm sure many of you on this call today are familiar with that, right? And really what that network provides is a discount, but a discount off of what, right? So charging $1.50, although it's small for a Tylenol, but it costs them less than a penny, right, to supply that. Gauze pads, we've seen this, very common, $77 charge. It costs them $4.90 for the box, right? But then even in a larger scenario, I've seen pacemakers, come in at $300,000, et cetera. And as most employers are relying upon the insurance company's negotiated discount off of these insane markups. And the basic business logic is, if I get to set the price for my services, I'll give you whatever discount you want, and I will always win that game. So we're going to challenge this part of the healthcare equation today, and it's one reason we can drive the cost as low as we have through this program. Next slide, Paul. And then as well, over the past many years, healthcare costs have increased significantly, 55%. The average cost for family care is $22,000. And then the cost of healthcare, as we said earlier, is far outpacing the wage increases that workers receive annually, right? And the result of all of this is that employees can't afford their healthcare. They can't afford their deductible, right? They're getting hit with surprise bills, and kind of an opposite effect of 25 years ago, people are skipping care. 25 years ago, people were utilizing care too frequently. Today, with high deductible plans, large out-of-pocket maximums, people are saying, you know what, I'm not going to go to the doctor, or I'm not going to get that prescription because I can't afford my deductible, my out-of-pocket, right? And it's pervasive all throughout the country. And then this is a simple little map of the United States. Let's focus on Texas, since we're all talking about Texas. But what this just represents is the average amount that hospital systems mark up their cost of services over their cost. So the average markup in Texas is just right at 1,000% over cost. Okay. And what this means is, whether you're getting a 45% discount through your managed care plan, 50%, if that bill's marked up 1,000%, you're still way overpaying for healthcare, and it's reflected in your annual premiums and what your employees pay.
So with that, what are we doing about it? How are we trying to solve the healthcare problem, right, that we're dealing with every day? And that's where I think we all come in together with I-360 and Agri-Services Agency. As I mentioned at the onset, we're trying to find innovative solutions for farmers and ag business, because that's what we do every day. That's what we do. We serve the ag community, and we try to kind of think outside the box to try to figure out a program that would work. And so AgriCare Health Plan is what we came up with. And so what an AgriCare Health Plan is, it's an association health plan, if you've ever heard of an association health plan or an AHP. And what that allows us to do is write individuals and small employer groups into a large group pool. So essentially that allows them to almost purchase insurance, like a large employer of 1,000 employees would be able to purchase. But instead, these small groups can go into this large group pool and become part of this association health plan. And there's all sorts of association health plans. We know of one that's a conglomerate of nursing homes, for example, or a conglomerate of accountants. Ours happens to be agriculture and farmers, and that's what it's focused on. So again, obviously, to be eligible to participate in the program, you do have to be a farm or ranch, an agriculture co-op, agriculture business. And so those rules do apply for folks getting into the program. The last bullet, just to kind of let folks know, is we're looking to do this in multiple areas where we feel like there's opportunity to help the farms and ag businesses. We actually launched this program in January of 24 in Kansas, and now we're looking to grow and launch in Texas as well. And we'll look at other states and other opportunities where we feel like we can help folks. So again, I kind of already mentioned this, but it's an opportunity to optimize health insurance and healthcare costs, provide coverage options in what we feel are underserved rural areas where there might not be great provider networks, higher cost premiums and those sorts of things. And again, it allows small employers to kind of share in the benefit of a large group plan. So from a small group perspective, the employer group sees this as a quote unquote fully insured program like you would buy with a Blue Cross or United or whatever, but we have it structured in a way that allows those small groups to become part of that big pool and essentially share in the benefit of that large employer group plan. I'm not going to read the eye chart to everybody, but just to kind of give you a feel for the breadth of what we have available to employers, because we understand that all employers have different needs and different wants. So we tried to make this as comprehensive as possible in providing a number of different deductible and out-of-pocket solutions. And you can see it along the top rows there. We've got a number of PPO plans, which is sort of your traditional PPO plans where you have in and out of network benefits. And our deductibles range from $500 to $8,550. That's a pretty great range, but some employers might want to offer a richer plan design like a $500 deductible. Some might say, what, I'm just looking for a low premium, but I want to cover my employees to make sure, God forbid, something doesn't happen catastrophic, that they're covered. So we've got, again, a wide range of PPO plan designs, but we also have HSA qualified high deductible health plan options that also have a pretty significant range. There are government limits and minimums that you can have on these deductibles, so we stay within that, obviously. But on our HSA qualified plans, we have deductibles that range from $3,000 to $7,000. So point being is that from a premium standpoint and an out-of-pocket standpoint, we've got a wide range of options for employers depending on really what they're looking for, what they can afford, and what they want to provide to their employees. These are some of the high-level underwriting guidelines associated with the program. Again, I mentioned you must be a farm or agribusiness. We can write sole proprietors on this, or any group size, any employer with whether it's 2 employees, 100 employees, or 200 employees. We do have participation requirements, 60% participation after valid waivers, and I say valid waivers meaning if you've got an employee that's on Medicare, or you've got an employee that is covered under their spouse that works at the school district down the street, those are considered valid waivers, and we don't count those in the participation of the program. But we feel like 60% participation is pretty reasonable for farmers and ag businesses. We do have medical underwriting in the program. So for groups that are like smaller groups, we do require medical questionnaires. And groups over 100 typically can get claims experience from their current carrier, and we can utilize that data to do the underwriting. I will tell you that for our initial launch in June, we are waiving the medical underwriting piece. And then after June 1, we will require the medical underwriting. So whether it was medical questionnaires or claims information from the current carrier. We can write employers anytime during the year. But we do have a common renewal date of January 1. The nice thing is, if you've got, if you're an employer that renews on July 1st, we do apply deductible credits from January to July so that you don't start from scratch when you come on our program and then start from scratch again in January. So I say we have a common renewal date of January 1, meaning everything starts over on January 1. We relook at the premium rates. Your deductibles and out-of-pockets reset on January 1. But again, the fact that we can apply deductible credits for an employer is extremely important when they're coming on mid-year into the program. And then the last bullet, I kind of wanted to point this out because, again, we deal with farmers every day. And a lot of large farms like to do management carve-outs where they might just cover the owner and the son and, you know, a key employee or something like that. We can't do management carve-outs on this program, unfortunately, but just wanted to point that out. So at the end of the day, what we see is, you know, lower payroll contributions from the employee perspective, right? Because your premiums are going to be lower, your out-of-pocket costs are going to be lower. Hopefully that leads to better retention and recruitment of employees when farms and ag businesses are looking to hire somebody. The nice thing about this, and Matt will get into this in more detail, but we essentially have an open access to providers, both physicians and facilities. So you're not restricted to, you know, your traditional PPO network where you have to go to a doctor or get a referral or something like that. We do have an open access type program. And again, Matt will get into the details of this, but you know, there's a lot of member support in this program. We have a system called the Care Navigation Service to assist members finding, you know, quality, low cost, cost efficient providers. So not only on the front end, if someone's looking, geez, you know what, I need to get a knee replacement, where should I go? We've got a team of people to help them figure that out and go to the best place for them. And then on the back end, we've also got a team of people that help walk them through sort of your, you know, the healthcare system, if you will. You know, what do I do when I get the bill, or what do I do? What do I have to pay up front? All those kind of things that go from choosing a provider to getting your services done and after. We've got folks to help members along the way. And then, you know, one of the things I think you see a lot more frequently now is, you know, virtual primary care or virtual urgent care. If you don't want to run to the doctor, you can actually go online, talk to people, get a diagnosis, get a prescription, and that obviously saves time and money. So you're not sitting at the provider's office waiting to get into the doctor for an hour and traveling there and traveling back. So we do have those services that are embedded into the program. And really, honestly, what we've seen, and we've both in Kansas and Texas, we've talked to a number of employer groups. And we are typically seeing 15 to 25% savings versus your traditional plans in the marketplace. And that's against, you know, the Blues and the United Healthcares of the world and everybody you would see normally in the marketplace. We have seen substantial savings on these premiums in this program. And how we get there is really what Matt is going to explain here in a second. But before I hand it over to Matt, I'll just say, like, to me, this is the epitome of what we're trying to do here. And this explains the whole solution very simply and really provides an outline of how this thing really works. So Matt, I'll hand it to you.
Great. So this is important to know as an employer. Your employees, this really is not going to be important to them. They want to know, can they get care? What's their financial responsibility, et cetera. But this is kind of behind the scenes how the sausage is made as it relates to reference-based pricing. And as we say this methodology I'm going to take us through here in a minute applies to big brick and mortar hospital systems. We're not looking to challenge doctors, okay? That's just not, that's not beneficial for anyone. But when it comes to big brick and mortars, going back to the markups we talked about earlier, that's one of the problems that we face in healthcare. So this methodology I'm going to take you through is something we started 18 years ago. This is not new to us, but just kind of more of a FYI, right? And so where it says charge master price at the top, $5,000, that's that list price the hospital charges. And let's just call this a CT scan, right? I've seen CT scans be billed at $20,000, but in this example, let's stick with $5,000. Under your current methodology, you're getting a discount off that $5,000 price, call it half off, right? So either you, the insurance company, or the employee has to pay $2,500. Hey, you got half off. Sounds great, right? Well, at the bottom of the slide here, that CT scan only costs the hospital $250, right? They marked it up tremendously. And so the structure we created many years ago was to say, you know, let's get off this crazy train of discount from the top. Let's set methodology in place that pays the hospital fairly. We want them to be profitable, but let's work bottom up, cost plus or Medicare plus, and price the healthcare services pay for healthcare services just like every other business runs their operation. They know what their operating costs are. They tack on their profit margin, and that's their business, right? We're just doing the same thing with healthcare. So we just simply say, all right, hospital, we're going to pay you one of two ways: your actual cost plus a 12% profit margin, or what Medicare would have paid, the largest payer of healthcare in the world, plus a 20% profit margin, right? And we're going to pay the greater of those two. Our goal is to be fair. In this example here, that $5,000 price for the CT scan, we would have paid about $336, which is profitable to the hospital. Now, take this back to your employee, and we'll talk about this more in just a minute. If they've not met their deductible, or they're out of pocket, they're going to pay $2,500 under your traditional plan versus $350 under our plan, right? And so how many hours would an employee have to work to make $2,150, right? Clearly more than a week's wage, right? And we're just simply putting you back in control and benefiting both the organization as well as the employees. This is the basis of reference-based pricing. So let's jump to the next slide, Paul.
Yeah, and I love this slide, Matt. Thank you. You did such a good job going through that. I'll just add one point to what you said. Most, if not all, providers do accept Medicare. And to Matt's point, we're paying above Medicare. So we're paying a premium on top of that. So we want to be fair and reasonable.
Yeah, this just makes the case here. So this is called an employee Jane. She makes $60,000 a year. She's got an $8,000 family deductible, which is not uncommon in today's insurance marketplaces. Right. So she has a CT scan. The traditional PPO plan, called the Blue Cross plan, allowed $2,800. In this example, she has a high deductible, so she owes $2,800. Now that's 57% of her monthly salary, right? Under the reference-based pricing approach, again, being fair and reasonable in our payment to hospitals, that $2,800 drops to $229, which is 4% of her monthly salary. So we're making healthcare affordable. And we're going to talk about on the back end how we advocate for employees if there's ever any kind of pushback. But this is the win for the employee, right? And then also with the rates that the Agri-Services program can deliver is a win for your organization as well. So member support is key. Okay, we want to support the employee on the front end and on the back end. But to reiterate what Paul said, we're not limiting employees' choice. Right? We're not restricting them to a select group of doctors. We'll tell your employees, go to any hospital you want to go to any doctor you want to go to. And you really don't have to do anything different on the front end than you're doing today. If you have a doctor relationship, continue seeing that doctor, right? Same thing with a hospital. If you want a referral from a friend or from your doctor, take that referral, okay? But we are overlaying a very robust navigation team. So let's just think about healthcare for a minute. You've got a 33-year-old employee. The last time they saw their doctor was their high school sports physical when they were a senior in high school, right? And now all of a sudden life's become real. They need to find a doctor. Under most insurance plans, they're going to go to a website. They're going to put in a zip code, and that website's going to spit out 75 options. And that employee just became overwhelmed. And you know what? They can do the same thing with us. Or they can simply call us or message us. And we're going to ask them, are you looking for a provider close to work, close to home? What's going on with your health condition as far as why you want to find a doctor, right? So we'll pull from your employee, your plan member, what they're looking for. And then we'll get back to them the next day with a handful of options. We don't want to overwhelm them. But we're going to show them what the cost of that service is going to be. They're out of pocket, right? The quality score of that provider that we're referencing, okay? But then also the availability of when they can see them. I used this myself a couple of years ago to find a cardiologist. I said, I'll take the second option at 8:45 on a Thursday morning, and they made the appointment for me, okay? This is available to all of your employees. By no means is it a gatekeeper, and your employees are not required to use this. We just want to highly encourage them to use the service. All right, so let's jump to the next slide, Paul. And this is just a really quick snapshot of what an appointment schedule looks like. This gentleman needed to find an orthopedic from an injury he received while skiing. He called from the airport from Colorado on a Monday afternoon. And by the time he landed in Texas, he had an appointment set up for him the next day to see an orthopedic. And this is just a real quick snapshot of, bring your ID card, your appointment is set. And these are the services we're delivering on behalf of your health plan. We highly want to encourage people to use this if they want to use it. Paul mentioned the virtual services, and this is a very robust program and a great way to save money. Okay. So embedded in the health plan and embedded within our organization is a virtual services that are there not only for urgent care, your basic needs, sinus infections, colds, flu, etc., but we've expanded this to include virtual direct primary care. Okay. Also virtual mental health for mental health therapy, including psychiatric. Okay. And in many cases, these services can be free if the employees use this. And as Paul referenced, they don't have to take time off work or drive. They can just call the service, or at a greatly reduced cost for the more expensive services like psychiatric or mental health. Mental health is the big buzz these days. It's really hard to find a mental health provider. And so you have unlimited access to the same mental health provider for unlimited appointments. Okay. Probably at half the price of what you spend at a brick and mortar therapy office visit. Okay. Again, we're not requiring employees to use this. We're just really heavily driving them, saying, let's save you money and time and effort, and let's get you the care you need quickly. And so we're driving employees to this for those that want the service. And so the plan, how it works for the member, and we've talked about reference-based pricing. This, and the plan designs Paul showed, these are all major medical benefit plans. They're not limited plans. And for the most part, it's going to operate just like you would operate under a Blue Cross Blue Shield plan or United Healthcare plan. Okay. Every member has an ID card. Provider's going to verify services just like they do under a traditional plan. Okay. In this case here, back to using Jane again, she needed knee surgery, right? She called us, although not required to. We helped her find a provider. Okay. She has her knee surgery done. She pays her deductible or out of pocket, just like you have to do today. Provider submits the bill to Imagine 360, my company. We are the insurance plan. We make payment, and in most cases, nothing happens. Okay. 98% of the time. So what happens to the 1% to 2%? What do you mean 1% to 2%? Well, we are challenging hospitals in their pricing. We're not paying them what they're billing us, nor do we have a contracted rate with them. We're paying them fairly, as we referenced earlier. But sometimes they send the member a bill, about 1% to 2% of the time, a bill for the difference between what they billed and what we paid them. And it'll be really clear, in no instance does your employee owe that bill. They owe their deductible. They owe their out-of-pocket just like they do today. Understand it's less with us than it is under traditional plans, but that's all that they owe. The one piece to this is that your employees need to call us if they receive the bill in the mail. And we won't go through the right-hand boxes. It's too detailed. But long story short, your employees do not owe the bill. They need to notify us. And once we're notified, we assign an advocate to them, and we take over the conversation with that facility, getting your employee completely out of the equation, and your employees 100% protected from any type of harassment or certainly any type of collections attempt from hospitals. Again, very rare, but we can't bank on the fact that it's rare. We have a solve for that 1% to 2%, and your employees protected. They just need to notify us. So communication is important, right? Our teams are bilingual, English, Spanish. Our communication materials are in English and Spanish. Our video materials, English and Spanish. Our call centers, also bilingual. So we can address most needs when it comes to language barriers, but just messaging with the employees, open your mail and call us. The reality is this: under a Blue Cross plan, they've got to open their mail, right? They're getting bills in the mail with Blue Cross Blue Shield, United Healthcare, Aetna, Cigna. We're just saying, if you get a bill in the mail, you just notify us, and we'll tell you, yes, Paul, you do owe this $300, or no, Paul, you do not. Meaning that if that $300 is your deductible, yes, you owe that, just like you owe it today. If it's beyond that, you do not owe this, and we take over for the employee. And then this is just the historical acceptance, right? More detailed than you need, but end of the day, balance bills are rare. We've done this for 18 years. We know how to take care of the employee. We know how to resolve them, and we have a very strategic protocol internally on how we resolve any disputed bills or disputed payments.
Thank you, Matt. So with that, that's kind of the presentation for today. Again, just kind of give you a little bit of an idea of who we are, who our partner Imagine 360 is, you know, why this program's different and why we feel it's important and why we feel it's the future of health insurance, quite honestly. So with that, I guess I'll hand it back to you, Alicia.
Yeah, thank you all for joining. And we had, we don't have any questions in the chat, but if you do, you can use that bubble. It should be on the right hand of your screen. You can chat us. We'll hang around for a couple minutes. But like I said, we will be sending out the recording, and I will be picking a gift card winner. So we want to make sure you guys get that. We'll be communicating via email and maybe a phone call from me. So let's hang out for just a few minutes to see if we have any questions. So just remember, you can put that in the chat. That will come to me, and then we'll direct that to whoever wants to answer. Okay, I am going to stop recording, and thank you all for attending. I feel like we're good. I don't think, oh, let's see, there is one question, 1 minute. And Paul, I just chatted that to you.
I'm sorry, it says, did we discuss the premiums?
So that would depend on the plan that they pick, correct?
Oh, right. Yeah. So again, if you're looking at our, you know, one of our options at say a $2,500 deductible, and you're looking at a similar plan design at a $2,500 deductible with Blue Cross, we're typically seeing 15 to 20, 25% lower premium. But the premium obviously will differ depending on if you're taking a $500 deductible versus an $8,500 deductible, right? The premiums will vary drastically depending on the deductible and out of pocket you choose. But again, against the marketplace, and we've seen it firsthand, we're seeing 15 to 25% lower premiums on our program.
The question is, how do we get that information? I think we could probably have Kristen reach out. Right, Paul?
Yeah, we can have Kristen reach out, or there's the 800 number on the screen. If you want to give that number a call, and we'll get you the right person, and Kristen can help you out. And he's right there in Texas, and can give you a hand.
Okay. Any other questions? And wait a few more minutes. Maybe 1 minute. Okay. Okay, we are good. Paul, Matt, thank you for joining us, Kristen, and all of our attendees. I will follow up with an email and make sure you have everyone's contact information. So
Awesome. Thank you,
cool.
Alicia. Thank you, Matt. And thank you everyone for attending today.
Thank you.
All right. Bye-bye.
Bye-bye.